Everyone, and welcome back to Planning with Raven. So, I'm actually really excited for today's video. I'm going to be going over the top 4 financial life steps that I took to basically get my financial life together. I did a video a couple of months ago about how I paid off roughly over $14,000 in under 12 months. And I basically did that with using the 4 financial life steps that we're going to go over today. In that video, I did touch base on the 4 financial life steps, but today we're going to go into depth and we're going to use a scenario that was actually provided to me from someone. This is someone's current financial life right now. So we're going to basically give them advice on how to handle it. Um, so let's go ahead and get to the nitty gritty. All right. So here we have top 4 financial life steps. Step number 1 is do the math, be honest with yourself. So basically what that boils down to is writing everything down. So sometimes it could be like super overwhelming when you have to pay different types of creditors. You have your monthly bills, you have your automatic bills, and then of course we have our outstanding debt. So by debt, I mean like outstanding loans, credit cards, personal line of credit. Some people go and get like cash loans, things along those lines. When those are outstanding, it can be super overwhelming when you're paying so many different creditors and so many different companies that it's really easy to lose sight of where your money is going. And that's how a lot of people, go in debt. That's how a lot of people stay in debt. And that's how a lot of people, become financially frustrated with their finances and they just feel like there's no way to get out of that situation. So, step number 1 just comes down to finding out who you owe, when you owe, and, then we talk about how we can plan on getting that balance taken care of, right? So, I don't care if you have closed credit cards, open credit cards, whatever the case may be, you need to get all that information and write it down. That's going to do a couple of things. So, one thing that it's going to do is basically give you peace of mind knowing that you are aware where your money is going. You worked hard for that money, so it's super important to know where it's going, right? And it's also going to kind of like put you in a better mental mindset. Because like I said, it's super frustrating and it's overwhelming when you have money just going all types of different ways, right? So it's going to kind of help you get to a better mindset financially, mentally, physically. A lot of people stress over finances. A lot of people, toss and turn at night over finances. So being able to figure out where your money is going, doing the math, doing that first step will definitely kind of get you going in the right direction. So step number 2, stay consistent. So of course, you did the math. You're like, okay, I got all of this debt. I got all these bills that I got to pay. So now what's the plan? So what motivates you in life? That's what you got to think about. So goals that you have set for yourself is the next priority, right? So um, in the scenario that we're going to go over, this person actually wants to save for a vehicle. So that's what's motivating them to basically get out of debt. Of course, there are the obvious reasons, right? Like you got a debt, your credit's going to raise, having peace of mind, having financial peace of mind, having just financial freedom, right? So those are just the obvious reasons for focusing and building your credit and, just getting out of debt. So you have to find a goal. And I stress this because finding a goal is so important because it's going to benefit you. When you have those rough days, it's just like working out where you're like, man, like I have a goal. I want to lose this weight, but I ain't trying to go to the gym today. So when you set yourself a goal, it's going to basically it's going to motivate you to keep going, even on those days where you're just like, man, like I ain't trying to do this. I'm not trying to, keep pushing, it's not easy. Living in financial debt is not easy. And sometimes it can be so overwhelming. You don't know where to start. And you're just like, is it ever going to end? Right. So you need to find a goal that's going to motivate you and keep you trucking through those hard financial days or those hardships that you may have where you're just like, I don't even want to do this anymore. Staying in debt is a little bit easier when it's really not, but that's what we tell ourselves. So find a goal that's going to motivate you to, get you through however long it's going to take you to get that debt paid off. Now, of course, if, you're 3 months into it and you're like, I got another goal, now I'm finding out what's going on with my finances. I'm getting a little bit more financial savvy. I have another goal that I want to focus on. Then by all means, you can do what you want. It's your money. It's your life. So, first things first, so set a goal that's going to motivate you that you're able to stick with for a couple of months and then just go from there. So, step number 3, pay yourself first. So, this is one of the most important goals. This is one of the most important goals because I say it's one of the most important goals because it's so easy to not understand. Like it's kind of easy to kind of misconstrue this step, I would say. When I say pay yourself first, I don't mean going to get your nails done, putting money to get your hair done. I don't mean, oh, like, I have an extra $10 this month. Let me go and, I don't know, support one of my hobbies. I don't mean that. What I mean by paying yourself first is putting funds aside for yourself, like in your savings, in your money market, into your IRAs, whatever the case may be, whatever personal savings that you have. If you don't have a savings, and that's totally fine. We can start building one. It's never too late to start getting a savings built. I don't care if it's just a personal savings. If we got to start with that, let's get that going. Let's get that trucking. So basically, when you are creating this step number 3, like when you're creating this for yourself, this path, paying yourself first, it's sometimes people are like, well, like I don't have any extra money. Like, I can barely pay my credit cards, let alone put money in the savings. It's really easy to think that, especially when you don't know where your money is going, right? So this step is going to actually benefit you for your goals, and it's also going to help you along the way. So it's going to do a couple of things. So of course, it's going to get you on the right financial path, but it's also going to help you like set yourself up for success once you're done paying off your debt. So this is a super important step. It's basically about applying the money that you have to the right places at the right time. So hear me out. You're working your day to day. We think that it's never going to end, that we're just never going to get out of that slump. But that's why it's super important to apply the money where it's supposed to go at the right times. So we'll get into that. Step number 4. So step number 4 is find a method that works for you. So what are you comfortable with? So of course, you want to do the math. That's step number 1. Let's see where your money is currently going, right? And once you do that, then how are you going to be consistent with your bills, staying up to date, staying up to month with the bills that you have going out, things along those lines. So this is one of my favorite steps, actually. So finding a method that works for you. Basically, what that means, like, okay, so I'm going to use myself as an example. So when it came to me becoming financially stable, financially independent, I tried numerous of, tools out there. One that I started with was Excel. The reason why is because Excel, it can be super convenient. It's easy if you're a beginner, intermediate, or advanced in Microsoft products. Excel was something that I use in my day-to-day, so I thought that was going to benefit me for budget. So that did not work for me. I tried journal budgeting. Of course, we're on our phones all the time. So there's apps out there that will kind of help you track your budget. Also, your banks. So your banks also help you. They have, some banks call them like a spending report, budget report, whatever the case may be. But a lot of banks are able to take your transactions and place them in different different places to where they think it goes. So for example, if it thinks that you went to Walmart and you spent XYZ, they're going to calculate that as groceries. If you go to Target, if you go to TJ Maxx, they're going to calculate that as shopping. So your bank kind of gets an idea of where your money is going, and they'll do that for you. That's convenient and all to start with. I don't recommend using it because you're not doing the math. If you use that, you're letting someone else basically tell you where your money is going, and we don't want that. We want to know where our money is going. We want to be able to track that ourselves. So while using the bank's tools is convenient and it's an eye opener when you're just beginning, you want to find what works for you. A couple of like the biggest method that works for me that I use till this day, of course, is my planning. So I have a planner. In my planner, I'm able to track my day to day and, of course, my finances. So I'm able to see the money that's going out every single day. And I'm able to see where I'm going to be spending my money for that month, for that paycheck, et cetera. So find a method that works for you. And of course, in this channel, I actually discuss, a couple of tools that I use in my budget planner, that I use till this day to kind of keep me on track with my day-to-day life. So definitely check out those videos if you have not yet. Another thing that's super convenient for planners, which I'm definitely biased when it comes to planners, like I'm all for planners, but again, find a method that works for you. But I'm going to talk about planners because I think it's a necessity, not just for finances, but just for your everyday life, making sure you don't forget things that you need to do. So with financial planners or just regular planners, whatever you decide to use, I find that it holds me more accountable. I'm a visual person. I'm a visual learner, and then I like to do. So when I'm able to write things down that I know that needs to get done, it makes me kind of hold myself accountable because I know that when I wrote that down, I was in the proper mindset to get things done. So if I wrote it down, I know that I was in the proper mindset to get things done. What I mean by that is, when you are writing down your goals, writing down the things that you're going to accomplish. Sometimes you can, you're eager. Just like starting to work out, right? You're like super eager, you're super pumped, like let's get this done. And, like along the weeks, whatever, you kind of lose sight of the goal. Going back to what you have set for yourself is super duper important because then you tell yourself like, I put this down. I know that this was my goal. I know that I wrote this down for a reason. Let me stay true to my yesterday's self. So definitely planners is something that works for me. Find a method that works for you. And to be honest, if you don't know what method that works for you, that's totally fine. Try however many methods you want. What I will say is at least use that method for a month or two to basically make sure it doesn't work for you. So you give yourself that peace of mind that you tried and it indeed does not work. And also, it kind of helps you be consistent because you don't want to lose track of your spending for that month because that will kind of confuse you. So those are the 4 financial steps that I have for you all. So let's go ahead and put them into play. All right. So here's our scenario. So this is basically us doing the math. So this person has a debt of $8,750. Their bills monthly are $1,800, and their income is $3,000 after tax. So this is what they bring home after all of their deductions. So this is their debt breakdown. So this is our customer basically doing their math, and I told them to provide us with this information, and they were so happy to do this. So we can provide them some information back. So this person has 3 separate credit cards. The first one is Chase. They owe $3,000. Their monthly minimum payment rather, is $200. Their due date is the 3rd. Their interest is 24%. And then Capital One, $5K, $304 is their minimum payment. 25th is the due date. Interest is 22%. Moving down to American Express, they owe $500. 76 is the monthly minimum payment. The 15th is their due date, and the interest is 22%. So this debt breakdown, what's super important about this debt breakdown is the information that I had our customer provide. So, of course, the amount. You want to know how much you owe. Your monthly minimum payment, because this is super important because when you're paying off debt, you want to hit it aggressively, but you also want to make sure that you're at least hitting the monthly minimum payment. You don't want to ever lose sight of that. Along with the due date, you want to make sure that you're making your payments before the due date, preferably, but at least on the due date. This person also has a student loan. Their payment is $250 a month. They owe $14,000 on the student loan. It's a federal loan, but this is also part of their monthly bills. So This is basically step number one. We just did the math for this customer. So let's go ahead and go over our other financial steps. So what's this person's goal? What's their motivation? Like I said, they wanted to buy a car in 12 months. They have a goal of putting $3,000 down. No goal is too outrageous. I mean, there are, but if you are eager to make shit work, then no goal is too outrageous. So, step for month one is always the hardest because month one is basically taking you out of your comfort zone. You're going to start doing things that you've never done before, right? And of course, the only way to get a high level debt paid off in a short amount of time is being aggressive. There's no other way. There's no other way because you're going to be hit with those interest rates. This person has a high interest rate on all of their credit cards. So the only way to make sure that we are able to tackle the debt in a timely manner is handling this aggressively. So month number one. So of course, bills, that's not going to go anywhere. So $1,800. The food budget that they have for the month is $180. That's roughly like what, $45 a week if I'm doing my math right. Why? Why is that their budget? Because we have other priorities. Yes, food is a priority, but this is a time for you to kind of get creative. You got to stick to your budget. You have to meal prep if you have to meal prep. You need to look up different recipes on Pinterest. Whatever's going to get you by, this is what you have to do. So not only are you learning to be financial savvy, but you're also learning to basically prioritize and get creative with, food and different recipes. So the American Express, we're going to just put $500 towards that. Why? Well, 22% interest rate, you only owe $500. Let's tackle that. Let's get that out of the way. Let's not even worry about that car. That's the least of our worries. We have two other cars that are our priorities. Let's handle that American Express. Let's go to Chase and Capital One. So for Chase and Capital One, we're going to put $200 and then $304 towards Capital One. Why? Because this is the money that we had left over. So this person makes $3,000 a month. We only were able to make the monthly minimum payment. So this is why I say it's super important to at least make the monthly minimum payments, because sometimes you only have sufficient funds to make the monthly minimum payments. With this monthly breakdown, this person's at $2,984. They have $16 left over. Leave that in your account. That does not mean go out and spend it. However, you have it available if you do need to go out and spend it, because some nights you may spend over the $45 that week, so you have a couple of dollars to your convenience. Month 2 through month 12 is where we basically start having fun. So bills not gonna change, $1,800. The food, etc. So $200 a month. So now we're at $50 a week. So you have $50 to your leisure. Is that a lot? No, but is that gonna get you to where you need to be? Yes. Is that reasonable for you to sacrifice for the next 11 months so you can be financially independent? Yes, it is. It's 11 months of your life. So now we're gonna break down Chase, Capital One, and our savings. So for Chase, this person is going to put $255 monthly. For Capital One, this person is going to put $430 monthly, and then their savings are going to pay $315 towards their savings. So why? Why do we come to this conclusion? I'll tell you why. So we have 11 months to pay off Chase, Capital One, and also have $3,000 to put down on that vehicle that this person wants. So Chase and Capital One, with putting these amounts towards these credit cards, that's going to get our customer paid off within that 12-month time frame. Because these are more than the minimum payments, this person will not be paying interest on the balances that are being carried over. With these calculations as well, we have taken into consideration some of the interest that they may get charged for, just carrying over a balance. So this person will actually have, if they stick to this, they'll actually have a little bit of money left over to play with. With saving $315, it actually puts this person like at $3,300 if I'm doing the math right on that. It'll put this person at a little bit more than $3,000 at that 12-month mark, so they can go ahead and basically put that down payment on that vehicle. And I want to do the math. So $3,465 is what our customer will have to put on that car. Now, The reason why we put more money towards your savings, towards the cards that you owe, is because emergencies happen. So you want to be able to have a couple of dollars kind of like floating mid drift. And that's where that extra like $465 comes from. And then like with these, there's like an extra $10 per month per credit card that this person has available to them at their leisure, because every month is not going to be the same. Sometimes you will have emergencies that will come up. The biggest thing is making sure you do not use your credit cards. Now, if you're asking about that student loan, so for student loans, there's a couple of different options. This person, I recommended that they did a direct consolidation loan. So basically, they had a student loans with numerous of different companies, and so because it was a federal student loan, we were able to consolidate with one loan officer. And so now this person is going to be, once they pay off their credit card debt, because that's revolving credit, this person is going to be able to focus on their student loan and start hitting that more aggressively once they're out of this 12-month frame. So I do want to thank you all for tuning into Planning with Ravyn. And before we go, I actually just wanted to just revisit the 4 steps, because I don't want us to lose sight of this. This is what's most important. Do the math, stay consistent, pay yourself first, and find a method that works for you. So thank you all for tuning in to Planning with Ravyn, and have a great day.